Hey, family. Happy Monday to you. Have you ever made a mistake on your tax return? And as soon as you e-filed it, as soon as you saw the acknowledgement from the IRS, you were like, shoot, I made a mistake. How do I fix it? I've been there myself personally with my own tax return. And that's why in today's video, I'm going to show you how to fill out a 1040X. A 1040X is the form that you fill out to amend or make changes to a U.S. individual income tax return. Now, if you are a Schedule C filer, you have a business, this form will also work for you. However, if you have a partnership, corporation, S Corp, you would have to use a different form. Also, this past Friday, on my podcast, Tax Relief with Timberland Bowens, I covered what is an amended tax return. And in that episode, I go into detail about what it is and why you might need to fill one out. Well, that was just Friday. Today is Monday, and there was a record amount of downloads. So I said, hey, the people that were looking for that episode, they may also want to know how to fill the form out. And here we are today. All right. If you're new to this channel, my name is Timberland Bowens, and I am America's favorite EA. I'm on a mission to fill the tax literacy gap one taxpayer at a time. So that means I want to empower you to be able to make decisions about your finances and taxes. All right. So I did a video earlier in the year, how to fill out a W-4 if you were married filing jointly. So you will see that I brought back Carl and Harriet Winslow for this example. Now, when you're filling out a 1040X, this is a continuous use form, which means there is not going to be a new one created for each year. This came out in 2021. All right. This is the most updated version. So for all amended returns that are for after 2019, for right now, we are going to use this form. Anything prior to 2019 is going to use the 1040X and it'll say 2018, 1040X 2017. All right. So for Carl and Harriet, this is going to be for tax year 2022, the one we just did. We want to make sure we have the tax year here. When they file their taxes, married filing joint, they do have Carl first, but you'll notice here that we have Carlton because we need his legal name. So we have Carlton O. Winslow. We have his social security number here. And then we also have Harriet B. Winslow with her social security number. All right. Here with the address, you want to make sure that you put your current home address, not necessarily where you live during the tax year. The reason for this is because if the IRS has to send you any correspondence in relation to this tax return, we want to make sure that you get it. Okay. So if you live somewhere else during 2022, but you moved at the beginning of 2023, please put where you live right now so that you get any correspondence from the IRS. So we have their address here, 1500 West Wrightwood Avenue, telephone number. We're in Lincoln Park, which is a suburb of Chicago, Illinois, zip code. Because they're here in the US, this row is not going to be relevant to us. Now, with this, we're not amending the return filing status. It's still going to be married filing jointly. If you are in the same situation where your status is not changing, you do need to make sure that you still check the box that's applicable to you. All right. So for them, we have married filing jointly. The reason we're doing this return, the thing that they realized they left off are two dependents. Because if you remember the show, Judy went upstairs and she never came back down. So, with the hustle and bustle of the Winslow's life, they forgot to claim her on their taxes. If you watched my video, How to Fill Out a W-4 for Married Filing Jointly, we had a little friendly debate. I said if I was them, I for sure would be finding a way how to claim Steve Urkel because he basically lived there, right? They fed the man. Didn't clothe the man because, his swag would have been a little different. But with this, they were able to get permission from Steve's parents to claim him. And then they remembered they had another daughter named Judy. All right. So those are two credits that they forgot to claim on their tax return. So when we look at the 1040X, you see here we have column A for the original amounts. So these are going to come directly from the return that was originally filed. Okay. Column B is going to be the net change. It can be an increase or a decrease from the corrected return and the original return. Column C is going to have the correct amounts. All right. And when you're filing a 1040X, you also want to include parts of the 1040 that actually changed. So in this situation, for the Winslows, because they forgot to claim two dependents, they are going to show the changes on pages 1 and 2 of the 1040. So that should be attached to this 1040X. And then they're also going to show the form 8812, which is for the additional child tax credit and for the other dependent credit. And then they're going to also have the 8867 modified to show that they also claimed more dependents. Okay. So here, their adjusted gross income, and this is for example purposes only, we're going to have 130,000, no net change. Now, when you're doing this in the software, it typically calculates this, but remember, we have to be smarter than the computer. So make sure that whatever the computer is calculating actually matches and makes sense. All right. So here in the software, we'd probably have a dash or a zero. Their itemized deductions were 31,000. That is not going to change with the corrected return. Okay. Then we have their taxable income as 99,000. Now I'm sorry. So taxable income is shown on line 5. However, because they don't have a qualified business income deduction, we have 0 there. So the 99 is just subtracting line 2 from line 1, and then we carry it down to 5. Okay. Now, there are tax tables within the 1040 instructions, all right? And instead of computing what the tax would be, you can look at the table to find the amount of taxable income, look at and pull it from the table what the tax liability would be. Remember, everybody has a tax liability. That's the amount that you owe before any payments or credits are applied. All right? So unless you earned less than the standard deduction, you're going to have a tax liability. That does not necessarily mean that you're going to owe, because through your job, you should have withholdings from your paycheck every time you get paid. You should be making estimated tax payments if you're a business owner, you own real estate. All right. So remember, tax liability doesn't necessarily mean that you owe. It's just the amount of tax that's calculated based on your income. So we have $13,009. That's going to remain the same. On the original return, we claimed, or Carl and Harriet rather, they claimed Eddie, which would be the other dependent credit because we have him in college for the purposes of this tax return. We have Laura, who's also in college for the purposes of this tax return. So those two other dependent credits are going to be worth $500 a piece. All right. Then we have little Richie, because let's be for real, who's really raising Richie? Is it Rachel or is it Carl and Harriet? My vote is Carl and Harriet. So we have the child tax credit, which is worth $2,000 for the tax year 2022. That's how we get this 3,000 here. When we subtract that, we have their tax after credits being $10,009. We carry that down, we have the $10,009. But on the corrected return, the non-refundable credits should be 5,500. And here is where we get the additional 2,500. When we add Judy, because she's under the age of 17, she's going to be eligible for the child tax credit in full, which was $2,000 for the 2022 tax year. Then we're going to have the additional 500 for Steve Urkel. So since he was over the age of 17, but he's still a student in school, and when I say in school, I mean college, we have that additional $500. all right, for the other dependent credit. So that's why we have the increase of $2,500. Now, when we go down here, what is happening? We have more of a credit to apply to the tax because remember, a credit is going to reduce the tax dollar for dollar. So here, the new tax calculated is $7,509, whereas before it was $10,009. All right, so that is a nice little change. When we come down here to payments, this is what Harriet and Carl had withheld. Excuse me. So they had $11,000 combined withheld from their paychecks for federal taxes. So they were in pretty good shape. When we get here, Form 8863 is for education credits. They had Laura and Eddie both in college, and they paid enough in expenses that they qualified for the full amount of the American Opportunity Tax Credit, which is $1,000 apiece in refundable credits. So we have 1,000 for Eddie, we have 1,000 for Laura. That's the 2,000. Even though the Winslows are claiming Steve Urkel on this amended return, Steve Urkel has a full ride scholarship because of how book smart he is. So they're not paying anything to his tuition. All right. So Steve is not eligible for this education credit based on the fact that they're not paying any education expenses. All right. So when we look at the total payments, we still have $13,000 just like we did on the original return. But check this out. On the original return, they had a $2,991 refund. All right. So what we're going to do, we're going to look at 18 and 17 and we're going to subtract that amount. All right. That brings us to the $10,009, which is what we had as the total tax before. Okay. When we go further down, we see that for line 20, if they would have owed, then line 11, column C, would have to be, I am so sorry, but I am not editing that out. When we look here, line 20, if they owed money, this didn't work in their favor, then line 11, column C, would have to be more than line 19. But we actually see the opposite is true, right? We have 10,009 here, 7,509 there. So when we go down to line 21, because this is not true, so your software may put a dash, it may put a zero. When we go down to 21, the difference between line 19 and line 11, column C, is $2,500. Now, when you have a refund here in this spot, you can choose to either have that amount refunded to you or you can apply it towards next year's tax. So if we were going to do that, we would put the tax year, which the next tax year is going to be 2023, and the amount that we wanted applied, right? But let's be for real. We all grew up watching the show. If you didn't grow up watching it, you were an adult watching it. You watched Family Matters. We know that Carl is tight with money. He is not applying that to estimated tax, right? He's going to have it refunded to him. It's all good. When we get down here to part one with the dependents, we did make a change, so we need to make note of that here. So on the original return, dependent children who lived with you, the original number that we had was 3, and that's for Eddie, Laura, and little Richie. Now, keep in mind, even if your child is away at college, for tax purposes, they're still a dependent if you were providing more than half of their care, all right, and upkeep. So when we add Judy, because she's upstairs, so they're still providing a roof over her head, right? She's just not coming down. We don't see her anymore. Then we add Steve, we have a net increase of 2, and the correct number is now 5. All right. Actually, let me correct this. I am so sorry. This should actually be 1. This is going to also be 1. to make this 2. And if you caught what I did there, I was just telling you about the other dependents and the children who qualify as dependents. I forgot that this is a change. So the other dependents, we had Laura and Eddie. We're adding Steve, and this should be 3. So it's still going to net out to be 5. It's just where you're putting them, okay? So for dependents, we have Eddie. I didn't fill out this information, but you will have to put last name, social, relationship to you. We have Laura. We have Judy, and we have little Richie. Now you see here, if you have more than 4 dependents, you have to see the instructions and click here. In the instructions, you would just add Steve onto another sheet. Your software will actually help you populate that, and you would add Steve, and it would have all of the same information. We want to make sure that we mark what kind of dependent they are. So we have Eddie, he is the other dependent, Laura's an other dependent, Judy qualifies for the child tax credit, and so does little Richie. As I mentioned before, Carl is tight with money, so he's not going to change his mind about donating to the presidential election campaign fund, and he's not going to let Harriet donate that $3 either. For our explanation of changes, like I said, we're going to attach any supporting documents and new or changed forms and schedules. The 1040 is now changed, all right, because it's showing those dependents and their credits there. The 8812 is now changed because we are making the calculation with Judy on there. And then we also have a changed 8867, which is the due diligence form, and the paid prepare due diligence form, and it's going to show the proof that we need um, to say that the Winslows can claim Steve. All right, so our reason, we have 2 dependents, we're not claimed, oops, 4, sorry about that. 2 dependents were not claimed for the tax year that were eligible dependents of the taxpayers. You can be short, simple, and to the point, all right? Now, if we were mailing this in, we'd have Carl's signature or date, Harriet's signature date, have my name here, business, didn't put my firm's address. I would sign date as well. My P10 is here. That is not my real P10. Please don't be creepy and try to use it. Phone number, you would have to put the actual phone number, not my real EIN, but if you're a professional tax preparer, make sure that you have that information. If you are a taxpayer watching this and choose to have a tax professional do it, make sure this paid prepare portion is actually filled out and it doesn't say self-prepared. Now, if you were having this e-filed, you are going to have to make sure, if you were the tax professional, that your client does sign an updated 8879 giving you permission to e-file this. Or if you are a taxpayer doing this on your own, your software will likely make you do an 8879 if you're e-filing it, something like TurboTax, H&R Block, or if you're mailing it in, just make sure you sign it. All right. I hope this was helpful. If you have questions about what the 1040X actually is, not just how to fill it out, make sure you go check out episode 40 of Tax Relief with Timlin Bowens, anywhere you stream podcast or right here on this channel. If you have any questions down below, let me know in the comments.